The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And good morning and welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettler, along with Accunet Mortgage and Accunet Realty Advisors owner Brian Wickert and licensed millennial loan consultant David Wickert. Good to have you guys back.
Well, thanks, Steve, and we want to thank Jerry Circatich for hosting the show the last 3 weeks. David and I were traveled to a very hard-to-reach location, along with my wife, Becky, also known as David's mom. And we took the blue button from our website along with us. You can find out where we went by going to the blog section of our homepage at Accunet.com. And I tell you what, if we get 10 texts during the show to the Accunet Mortgage talk and text line, which is 414-799-1620, we will reveal where we took the...
And maybe hints along the way as well.
Yeah, maybe we'll give you some hints along the way. Hey, so... this week we want to start out talking about a article that was in the the Milwaukee Journal-Sentinel, and also JS Online by our friend of the show, I'm going to call him Paul Gores, a longtime business and real estate writer with the Milwaukee Journal. And the story was about a drop in home sales reported by the Wisconsin Realtors Association for the month of July, along with a dip in mortgage rates that happened this week, which brought mortgage rates to their lowest levels of 2017 so far. He contacted me for some comments, so you will find some of my comments in that article. First of all, I want to compliment Paul because he is like the only reporter in the United States of America that I know of who, when he reports the Freddie Mac weekly rates, remembers to include that weekly average rate comes with some points. Points are interest paid in advance, and so he accurately quoted 3.86% was the Freddie Mac weekly average, but you had to pay a half a point, Steve, to get that rate. Half a point on $200,000 is an extra $1,000 in closing costs on, let's say your typical lender out there is charging $1,700 to close a loan, so you're looking at $2,700 to get that 3.86 rate. David, where did we end the week at low overhead Accunet?
3.875 with just $700 in closing costs. APR is 3.92.
By the way, so there you go, $2,000 less than the national average, just like you hear me saying in the radio ads all the time. So that's good news. But let's start with some other good news from the overall report on from the Wisconsin Realtors Association. Here's one positive nugget that I dug out of the numbers. 10,057 homes were listed for sale statewide in July, and that's only 11 fewer than in July of 2017.
16 last year.
Yeah, 16, that's what I meant. 16 last year. The bad news is that the total number of homes now listed for sale as of the end of July in Wisconsin, the entire state, is down to 39,573, which is 6,300 fewer homes from which to select. That's a decrease of about 13%.
Well, who were you talking to this week who gave you the anecdote as well?
About the hot sale?
Yeah, or just limited listings.
Yeah. Right. Okay, so I have a story that I'm going to share in the future.
Okay.
Like, I can't say that story yet. Okay,
no.
So you got to stay tuned for the story about the crazy prices that people are getting for their Wauwatosa homes. But the one that I can share is that this is kind of sometimes a lull for listings because people are on vacation. And in August, so it's kind of somewhat traditional.
Everyone went to the French Riviera. They just take August off?
Maybe.
Okay.
Maybe, yeah. But instead of, typically she was saying her office might have 10 or 11 listings per week that come out, they're like down to 1 or 2.
Slim pickings.
So slim pickings on the listings. Number of home sales, so this is what the article was about. The number of home sales statewide was down 5%, which is 430 homes. So there were only 8,178 home sales in July statewide. On a year-to-date basis, though, we're about even. We've sold 46,931 homes statewide through the end of July. That's only 34 fewer. But it seems like this dearth of inventory is starting to take its toll.
It's the same number year to date, but everyone's seen everything that's already been listed.
Correct. All right, so when we come back from this first break, we're just going to break this down a little bit finer by region because there are some wide variations among the different parts of the state. We'll get to that when we come back.
Right here on the Accunet Mortgage talk and text line, you can join us as well at 414-799-1620.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
One of Milwaukee's leading architects agrees that the downtown building boom is truly unprecedented. The question now is, how long will it last? John McCure asks one of the area's top architectural minds at 3:20 that question tomorrow afternoon on Wisconsin's Afternoon News here on WTMJ. So the numbers for the July home sales, again, a lot of talk about that in the last week here.
Yeah, down 5% statewide. Now, when you kind of really look at the number, the total number of sales was only down 430 for the whole state. But then if you kind of break it down regionally, in the 4 counties, southeastern Wisconsin, Milwaukee, Waukesha, Ozaukee, and Racine counties, home sales were down 162 units, or 7.3%. Now, we're the biggest region in the state, so that's 2,069 homes that did actually sell. If you go over to south central Wisconsin, which includes Janesville, Beloit, and Madison, Dane County, they were only off by 30 sales. They were down 1.7%, so they account for 1,700 sales, 1,717 to be exact. And if you go over to the western part of the state, Eau Claire, La Crosse, St. Croix counties, right across the border from the Twin Cities, they were only down 45 sales, or 5.5%. But, by the way, Eau Claire and St. Croix County, both were up. Interesting. La Crosse was down.
Okay.
Green Bay and the Fox Valley was where we saw the biggest dip in home sales. We just saw our cousins and my brother, everybody was down for the Wickert Family Lake Day yesterday, and they were saying, yeah, boy, the real estate market's really tight in Green Bay. Sales were down there 14.4%, down to 1,470 sales, which is 247 fewer. So they're accounting for well over half of the drop in statewide sales in that area. Then you got Wausau, Portage, that's central Wisconsin. They were down 4.5%, only 24 sales fewer. And finally, the northern part of the state, up there by Eagle River and Superior and Ashland and Minocqua and all that kind of stuff, they were actually up 87 home sales to 801 sales this past July. That's up 12.2%.
Oh, man.
So they were the one bright spot. All right. So now, Steve, you play Paul Gores, and you get to ask me the questions that he asked me, and I'll see if I give you the same answers today that I gave Paul on Thursday.
All right. Well, let's start with question number one. What's keeping mortgage rates so low? And then also what in the economy or the world is keeping them down for so long?
All right, my number one answer is inflation, which is the enemy of interest rates, right? So if you had inflation clicking along at 3, 4, or 5%, you're going to demand more on your fixed interest rate investments like government bonds and mortgages and things like that. So inflation is way low, far below the 2% target that the Federal Reserve and the European Central Bank has set out. So low inflation is my number one answer. David, do you want to chime in? You got anything?
Not in a radio segment that short.
That's short. The other thing is that worry that stock prices are too high. I read some articles while we were away talking about, even though internet was hard to come by when we were on our trip
abroad.
Stock market values, like, God, how can they keep going up? So people are getting a little nervous and they're pulling money out of the stock market and putting it into bonds that has a positive effect on interest rates. And then also the whole reason we got to step back and say, why did rates go up in the first place? It was the election and the market's assumption that the Republican president and Congress would push through all these great economic incentives and they would get a lot of stuff done because they control everything. And that's why stocks ran up and that's why interest rates went up. Well, and that hasn't materialized. So I think there's some concern that ain't going to happen. All right, that's my first answer. If you want to give me one more question before we break.
Yeah, question number two pertains to the housing shortage, and it seems like builders are wanting to build higher-end homes, but what about the people that can't afford a $300,000 or greater home cost?
I don't see any solution on the horizon. I mean, what happened was in the big financial downturn in 2008, prior to the crisis in like '05, '06, and '07, America was producing about 1 million new homes per year. That dropped to less than 400,000 at the bottom of the crisis, 2011, 2012. I think it was 300 and some thousand was the lowest year, maybe like in 2012, of new home construction completions. You wiped out a whole bunch of capacity. The builders went out of business. People that were in the trades got out. And now those people just are slow to come back. One of the people we were on this adventure with was from Seattle. He said they cannot find electricians or plumbers over there. So I don't see any.
Hard to build a house without plumbing or electricity.
Exactly. And all right, so that's my answer. All right, let's take a quick break and we'll finish up on this topic of what's going on with inventory when we come back.
And if you want to go to Accunet.com, you can find out by seeing where the blue button was taken, where Brian and David were for the past 3 weeks as we continue on with the Accunet Mortgage and Realty Show on WTMJ.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, the Brewers' long and winding West Coast trip will finally come to a close today out in Los Angeles against the league-leading Dodgers. Jeff and Lane will bring it to you here on WTMJ beginning at 2:35 this afternoon, sponsored by your Milwaukee Honda dealers. So, Brian Wickert and David Wickert back with us. Do we want to go to this text question or continue on with questions 3 and 4 in the Gore article?
Let's answer the text question because it's a good one.
Okay.
And it was very simply, so why are sales down statewide? And the super simple answer is because there's not enough properties for sale. So you have many willing buyers out there, but not enough homes for sale. So we've got a shortage of supply, right? And that is the real reason why home sales were down in July. Now, hopefully that'll correct a little bit as we go into the fall. Why? Because you have buying pressure goes down a little bit, and people still continue to list their homes for sale in August, September, and October. Maybe by next week, we'll have at least a early indication of whether our inventory is going up. All right, so back to the Paul Gore's question.
But the good news is, sellers obviously are in the driver's seat here.
So it is definitely a seller's market. By the way, that we measured that in terms of the number of months of inventory we have, and statewide it's down to 5.8. That's considered a seller's market. All right, hit me with your next question.
All right, question number 3 here from Mr. Gore in the Journal Sentinel was the outlook that you have for mortgage rates. What do you see happening down the road here?
And my answer to Paul was, I am surprised and yet delighted that they're still as low as they are. The fact that we can do 3.875 on a 30-year fixed rate with no points and $700 of total loan costs.
APR 3.92.
Thank you, Mr. Regulatory Compliance Assistant Guy. David, that's always important. It's just amazing. Now, there are companies with many more economists than we have on staff because I'm not even an economist, but I'm the chief economist, sort of, at Accunet. But people like Fannie Mae and the Mortgage Bankers Association are calling for the 30-year fixed rate to only inch up a little bit to 4.1% on average through the end of next year. I will be delighted and surprised if that's the case. So eventually, inflation, tight labor market, those should push things up. All right, your last question.
Refinancing. With rates as low and as long as this has been going on, has everybody refinanced, or are some people still not, haven't even done this?
There are foot draggers. What do we call that condition, David?
Refi-phobia.
Refi-phobia. Maybe they had a bad experience when they bought their house getting their mortgage, or maybe they just think, well, rates aren't low enough, because my granddad told me that rates had to drop a full % in order to make a refinance worthwhile. And I'm sitting there at 4.5, and I haven't heard Brian Wickert say 3.5 yet on the radio, so I don't think it's worth it. And the reality is, depending on your loan size. Now, if you've got a $50,000 mortgage, you're not swinging a very heavy payment there. So, yeah, it probably does take way more than 1% to make a refi worthwhile. But let's say you're sitting there with a $200,000 mortgage. If we drop your rate 0.5%, that's $1,000 a year of interest.
That's real money.
That's real money to most people. And because we can make the closing costs so low, remember, we always present people with a low-cost option, but we'll also almost always give the people a option of a rate with no loan costs whatsoever. That really takes the economic friction out of it. The other thing that's happening, Steve, is property values are going up. And so that allows people to do a couple of different things. Maybe they bought their house and they're paying FHA mortgage insurance or private mortgage insurance called PMI. Well, with home prices up, we might be able to drop their mortgage insurance payment, and then their rate doesn't have to change at all. These are just things that normal humans don't think about. And then lastly, we're still seeing a lot of people doing two other things, taking cash out, maybe to remodel, because, again, the home prices have gone up, so now you got equity you didn't have before. Or if they've got a home equity line of credit, they're realizing now after the Fed has raised rates 3 times, oh, my God, that's an adjustable rate mortgage. It went up from 3.75 or 3.5, and now I'm at 4.25, and they want to get out of that adjustable rate home equity loan, put it together with their first mortgage, and get all their mortgage financing under one fixed rate. Yeah. So that's the scoop there. Hey, when we come back after the news, we want to talk about some people who are downsizing. I had a couple of conversations this last week since we've been back.
Okay.
About people who are downsizing right around retirement age, like 59, 60 years old, and we've got some very instructive stories to share when we come back after the news.
Joining us from the WTMJ Breaking News Center is Nick Van Wagenen.
Thank you, Steve. Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And David Wickert as well. We'll get to the trend of downsizing in this market and going forward into the future. Well, we got an interesting text question that just came in here on the talk and text line. And people, by the way, can join us on that number at 414-799-1620. It has to do with somebody that discovered water or property damage after they closed. Do they have any kind of recourse there?
Yeah, unfortunately, the only real recourse you have is to contact the seller. Now, you probably want to contact an attorney because what's implied in that question is that the seller knew about the water damage prior to closing and failed to disclose it. So all sellers in the state of Wisconsin have to fill out a real estate condition report and disclose any problems with the property they have. Real estate agents also have a duty to reveal to all parties any material adverse conditions. So you could also attempt to go after the listing agent or broker if you feel he or she had knowledge of the water problem and did not review it. So, ultimately this is something that you have to go to court or at least threaten to go to court about in order to get it resolved.
What about the home inspector?
If there was a home inspector done, now the home inspector's liability typically, according to their agreement, is limited to the fee that they charged. So, if you paid $500, that's how much you can go after them for. But again, the real problem, I think, that's a good question, Steve, by the way, is that did the seller know about it? Did the seller know about it and fail to disclose
and sometimes listing agents pretend that they don't know, too.
They really, I don't know. I'm not going to comment on that. Oh, perhaps. It's possible. It's possible. Right. But you're not supposed to. If you're a listing agent or a buyer's agent and you observe or know about a material adverse fact, you have to disclose it to all parties. Okay. So back to downsizing. This is something Jerry talked about last week on the show. And we get it all the time. So the particular case that I had come across my desk is a fellow who's still working, 60 years old, and we had done a 10-year fixed-rate loan for him 3 years ago.
Whoa.
And what does that tell you right away, millennial loan consultant, about the size of the payment?
It's a big payment.
It's a big payment, right? Because on a 10-year loan, you are paying off principal in big chunks every month. And so now he's decided he owns an east side, really nice home. Let's say it's worth around $700,000. His mortgage balance is only like $125,000. So he's got this ton of equity in there. But he wants to buy the new retirement condo before selling. And so one of the issues we have is you have to qualify for the principal and interest, taxes, and insurance payments on both homes. If you want to buy the new home before selling the old one, you got to be able to carry both monthly payments and prove that you've got enough income to do that. Well, when you have this giant,
juicy payment,
it's an east side Milwaukee County, so the property taxes are high as well.
Ouch.
Okay, so that's one factor, kind of obstacle we faced. And then the other thing he was thinking about doing, he's got a lot of retirement assets, which now he's 60 years old.
Hey.
So you could take some of those retirement assets without penalty, right, Mr. Former Series 7?
59.5.
Yeah, 59.5. But he was thinking about taking some money from his Roth IRA. What's the unique thing, David, about a Roth IRA?
Tax-free.
Tax-free, yes.
Yeah.
The money you put in there, you already pay taxes on. So when you take it out, you don't have to pay income tax on it. Okay? And so he kind of said to me...
Yeah, but you got to take it out.
But you got to take it out, and then it's not growing tax-free anymore.
Right.
But because people only know what they know, kind of he made this offhand, I don't really want a bridge loan. I said, okay. So you take the money out of the Roth IRA, blah, 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 blah. And so one of the really good things I came up with, first of all, is I said, well, let me just tell you a little bit about the bridge loan product that we have available. And we got around to the point where I said, let us pay off your existing mortgage.
The 10-year fixed at the high payment.
With a humongous payment,
like
almost $3,000 a month.
Ugh.
Just principal and interest. Let us pay that off. And let us give you the money. He needs about $100,000, let's say, to buy the new house.
Yeah.
Let me lend you that money on the bridge loan as well, because then you get to leave your Roth IRA money alone.
Right.
And that means that significant, over $100,000 gets to continue growing
doing
tax-free. If you take it out, you cannot put it back in there, as far as I know. All right, so that was one component to the solution. I'll give you the rest of the clever way that we're going to help this gentleman accomplish his mission when we come back from this next break.
Right here on the Accunet Mortgage and Realty Show. You can also join us on the talk and text line at 414-799-1620.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Anti-Semitism has been in the news lately because of the chaos in Charlottesville, and it's something that's on the rise all across the U.S., according to the head of the Milwaukee Jewish Federation. Alana Khan sits down with Belinda Babinek in this week's edition of WTMJ Conversations, coming up at 11 o'clock this morning. Right now, it's the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert. We've got a situation here where a seller or a person that has a home that they're looking to downsize from, quite a bit of equity in it, is not wanting to sell that before they buy into their condo or smaller size home.
Yeah, and this is in the theme of sometimes when you're navigating, getting into retirement, you need a guide. To drop a hint on where we traveled to. You need a guide to help make sure you've got a good game plan, working with your financial advisor to get you where you need to go. That's my segue back to you.
Okay, that's good. Yeah, you need sometimes you need more than one guide. I mean, you need a financial advisor in this case, a smart mortgage person, real estate agent. And so we helped solve the first problem, which was he had this big 10-year fixed payment. All right, we're going to pay that off with a bridge loan. The bridge loan product we have available doesn't even have any payments, which is kind of handy. Mm-hmm. Now, the interest meter is running, but we only have to qualify the person using the interest-only payment on the bridge loan, mm-hmm. right? So that's a big reduction in monthly debt load. Now, it turns out that the person still doesn't earn enough money to carry even the reduced bridge loan debt and the payment, including the homeowner association dues on the new home. We're just a little bit out of reach. So, two options we have there. We could, because he is 60 years old, and we have done this dozens and dozens of times, he can begin taking withdrawals from his IRA, all right, because he's of retirement age. He's 59 and a half. Mm-hmm. And then, let's say we needed him to take, I think I calculated the amount, he needed to take out $3,000 a month from his IRA in order to supplement his current salary so that he could afford both payments at the same time. Mm-hmm. We can use that as qualifying income.
Yes.
All right. And then he only has to pay income tax on the amount that he's withdrawn. And he only has to do that withdrawal. We kind of make it look like it's going to continue forever, but it's America, and you don't have to keep doing that. We can't make somebody keep taking the withdrawals after closing on the new property. So he could, if he so chose, stop taking those and cut off the tax.
Documenting that he could.
Documenting could. Okay. So then the other thing is we have a really cool loan program, very unique, where we can convert a person's pile of assets into theoretical income. It's called an asset depletion loan. So we just do a calculation, and if a person had $1 million in their IRA, we give it a 30% haircut, so that gets it down to $700,000, and then we divide it by the number 60, meaning, well, what if he depleted these assets over the course of 5 years, which is 60 months? Voila, we all of a sudden have $11,666 of income that we can use to qualify the buyer without ever having him take any withdrawal whatsoever. And that's the tool we're going to use in this particular case. And that is an adjustable rate mortgage, by the way, because it's a bank portfolio product. Very unique. Very few lenders have access to that type of a loan program. So we are going to hit the ball out of the park. We're going to help this 60-year-old person extract some equity from his existing home, and he's got a ton of it, but we're only going to extract enough to make the down payment on the new place. We're going to do that with a bridge loan, which has very low carrying costs. Then we are going to help him by keeping his Roth IRA money in the Roth IRA, which allows that to
do its thing,
accumulate and continue growing tax-free, not tax-deferred, but tax-free until he decides to take it out or he dies. That's probably the best part of the story.
Yeah.
Do the math on that, but that's huge. And then we're going to help him buy, the new place before he sells his old. Then obviously what happens, maybe it's not obvious, when he sells the old place, he pays off the bridge loan, and he'll still have a ton of equity, which he then might want to use to buy a vacation home somewhere. So we're really setting up his condo to be long-term financing. All right, so there's your success story of the week.
Good work, Guide Wickert.
Well, thank you very much. I've got I'll save this story for next week.
Okay.
I've got a similar story we'll save for next week. When we come back from this last break, I've got some quick home price appreciation numbers to share from the Federal Housing Finance Agency for Wisconsin and other states in the union when we come back.
And you can join us on the Accunet Mortgage Talk and Text line. That number is 414-799-1620.
Don't just find a house, find your home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And we're into the home stretch here of the Accunet Mortgage and Realty Hour on WTMJ. So we're now up to home price appreciation numbers for Wisconsin and other parts of the country.
I'm going to do an audible on you on the break.
Now that it's football season.
Yeah, now that it's football season, I'm going to call an audible at the line. We're going to save that for next week because I got quite a bit of data. And instead, we were just talking about the person, downsizing at retirement age 60. So the corollary to that story, different call that I got from a very savvy financial advisor friend and client of mine, Jim Wozniak, who's with RBC Wealth Management. And he's got a client who is 59. Won't be 59 and a half until early next year. And is retired, is not working. And what you do, generally speaking, when you get to be that early retiree age, is you want to use your non-retirement money, it's money that you got in the investment account, first, because taking that out to live on has no tax consequences, or very minor tax consequences, compared to taking the money out of your 401k or IRA. So this person has kind of gone through that money, and now they're 6 months short of turning the magic age of 59 and a half, and they too have significant retirement assets and a bunch of equity in their home. And the phone call that the financial advisor got was, hey, I need to start withdrawing a bunch of money from my retirement accounts at age 59. So what's the problem with that, former financial advisor David?
Early penalty, 10% off the top.
So 10%. If you take money out of your IRA before you're 59 and a half, you're going to pay a 10% penalty. On top of that, the minimum federal tax bracket for earning $1 or more of taxable income is 10%. The state income tax bracket for earning at least $1 of state income tax is 4% in Wisconsin. So what's 10 plus 10 plus 4, David?
It's almost a quarter.
That's 24%. So if this guy were to take out $1,000 of
took
money,
out 4 quarters, he'd have to give one away in taxes.
that's right. $240 goes up the chimney.
Yeah.
So the financial advisor's smart strategy was, is there a way we can tap the equity in your home to kind of get us to next year?
Oh.
Plus, by the way, they wanted to do some sort of remodeling to their house.
Wham, bam.
So perfect timing. Let's do a cash-out refinance with this extra equity we have from all the home price appreciation that we're enjoying in America. But one problem. What is their qualifying income? Zero.
Right. None.
Right. So they've been enjoying the zero tax bracket because they've been just living off their savings. Once again, what comes to the rescue? Our very unique synthetic income asset depletion program, because the guy's got, again, significant assets in his IRA. We just run the calculation on that pot of money. He doesn't have to withdraw anything, and we're looking at a loan where we're going to hand this guy $100,000, which is going to be enough for him to do his remodeling project that he wants to do,
and have some money to get him
probably well beyond the 6-month period. So we are helping this guy dodge a big tax bullet.
That's a win.
That is a huge win. Thanks to the savvy guy there, Mr. Jim Wozniak, who knows. He doesn't know everything. He knows, like, hey, I want to help this guy avoid taxes. Brian, how can you help me with a mortgage? And we had to overcome a big obstacle, which is we could not, in this case, by the way, have him start taking withdrawals from the IRA.
No, because he's
not 59.5. Right. So then we can't use that trick. So we had exactly one trick, but it was the right trick for the job. All right, so as we kind of come to the end of our first hour back here from our travels, you can go to Accunet.com, and I'm going to start running an ad this week talking about how you definitely need a good guide on your home buying adventure, just like David and I had to have really good guides, more than one, to get where we took the blue button. Was that a week ago?
2 weeks ago
2 weeks ago today is where we planted that at a very unusual
It's a great
location.
photo.
You can, Thank you. Yeah, you can just go to Accunet.com, ACCUNET.com, scroll down a little bit, and you'll see the photo of where we took said blue button. So, here we are at the end of August. Home inventory is tight, but we are seeing a resurgence this past week and people kind of getting back out there for what I'm going to call the...
Well, and from what you described in inventory, you absolutely need your rock-solid pre-approval hunting license, because if inventory is slim, you are going to be pushing other people out of the way to get to go look at new listings. You got to be the most attractive version of yourself, especially even compared to others.
Absolutely. And that's what our Rock Solid Guaranteed Pre-Approval program is absolutely designed to do. One of your team members, David, had a call this week from somebody who had literally a flimsy bank pre-approval letter and was about to go shopping. And, well, no, I don't really want a pre-approval letter from you guys. I already have one from my bank. And we were able to say, well, send us a copy of that. And it's like, it barely said that they checked their credit, let alone verify their income and down payment, which is the whole key to ferreting out problems ahead of time and making the seller comfortable with accepting your offer. Believe me, folks, people are really respecting. I'm sounding like the president there. Believe me, folks. Yeah, sorry. We really can help make a difference in you winning an offer on that home purchase. And also, rates are super low. All you got to do to get started, find out how much you can save with a no Social Security number required refi checkup, or get started on Rock Solid Pre-Approval to buy. Click on that blue button, which has now traveled someplace very exotic. And you can find the blue button at Accunet.com. Thanks, Steve. We'll be back next week.
And we'll check in next with Nick Van Wagenen from the WTMJ Breaking News Center.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.